Alphabet reporting better than expected earnings, showing some strong growth despite growing AI competition. And there's been a lot of worry about what that could mean. Joining us right now to discuss earnings, antitrust scrutiny, and so much more, Michael Nathanson, Nathanson, founding partner, senior research analyst. What do you make of these numbers? You know, I think there was a lot of worry that AI and maybe some of the competition and even just changing around how the blue link economy works was going to really weigh on the company. It does not appear to be.
No, a lot of anxiety, Andrew. Every quarter, we go into earnings with the fear this is the quarter when they show real deceleration. Wasn't the case. Yet again, they're growing double digits in search. And this is for 7 quarters in a row since the kind of the arrival of ChatGPT. They're growing double digits. It's, you know, it should at some point calm the anxiety, but I don't think it's doing that yet.
So the question, though, is, are you a believer effectively that this double-digit growth just continues unabated? Are you a believer that the market share piece gets more complicated? Look, the truth is we just had the CEO of Perplexity on the broadcast yesterday. I use that service oftentimes. I play around now, obviously, on ChatGPT, often find myself just in there and ultimately searching for something. I imagine that has to be taking me away from the blue link economy in some way.
Without a doubt. We'd be naive not to think that this is going to have an impact on growth. The search has been around for more than 20 years. The double-digit growth is not in anyone's forecast, right? It should decelerate. But we've been pointing out forever that there's commercial searches and non-commercial searches, right? So what you're doing in Perplexity may not be looking for, you know, the restaurant tonight or a golf ball. And there's no way at this point that they can monetize it. But without a doubt, the stock price of Alphabet and our own models are going to suggest deceleration. That's going to have to happen. But it may not happen as quickly as people think, and the company's diversified into other businesses.
Well, that's what I was going to say. So the stock's $165 right now. What do you think it's worth? And then how do you start to layer on the Waymos and everything else that's going right?
Yeah, exactly right. So we think it's worth $210 a share because if you look at it, the market is putting on a below market multiple for the entire company. You know, we're saying it's going to grow as a company slower than the entire S&P 500's earnings growth, which makes no sense, right? You have YouTube, which is now $55 billion of revenue, will be the biggest media company next year. You have cloud growing still in the mid-20s, it's going to accelerate. You have a subscription business, which is going to be $20 billion. And then you have Waymo, which has no valuation in the stock today, right? So you look at this and you say, if there is a breakup, if there's pressure to change this asset mix, the sum of the parts of this company is massively higher than where it trades today. And we understand the fears, and you raised them about Perplexity and ChatGPT, but that's just a narrow way to look at the company. There's so much diversification here that I think it's just too cheap. I really do. I think and also defensive relative to other names in advertising because search is
what kind of number would you put on a Waymo? What kind of if Waymo were spun out, what would you put on that?
We've been talking about $60 to $100 billion, and that is the question. Is
and you think that's not in this at all?
No, not at all, because you know it's not. There's nothing disclosed. They said last night. They said thanks for the first question on Waymo on our earnings call ever. Right? It's something that's not discussed by the company or the investor base yet. Right? But that's going to happen if Tesla's worth what people think it is. Waymo is incredibly. It's a call option inside Alphabet that no one's pricing at this point.
When you think about their spending and the capex piece of it, the other sort of, I think, halo that the market's rather happy about is these guys are not going to slow down. Therefore, the rest of the ecosystem is not going to break, if you will, because people were nervous. Are they going to still be buying and building the kind of AI infrastructure, needing the NVIDIA chips and everybody else's chips the way people had expected all along? Do you imagine that kind of spending continues apace?
I think it continues apace when the revenues are there, right? So they've said to us, look at cloud. Cloud's growth is being constrained by lack of capacity, right? So as they add more chips, more data centers, they think they can grow cloud, and we expect it to accelerate. So if they can monetize their cloud offerings using AI, they'll keep spending. To your point in the beginning about search, the search growth the past 7 quarters is also fueled by AI, right? It is, you know, that's the meta bull case, and it's happening within search and YouTube. Right. So I think they spend as they grow, And from what we can see is that the modernization through AI is really working. And again, we love Meta, but this is a company here that's doing similar things in advertising that people are not recognizing. So I think it does.
Do you think we're going to
continue.
see a big slowdown? I mean, come next quarter, though, do you think we're going to see a slowdown in advertising as a function of this tariff situation? That small businesses that were advertising on Meta and were advertising on Google had to pull back. I don't know the answer. I mean, I imagine it is yes, but I don't think anybody knows how much. What are the numbers you put on that?
Okay, so that is the question we get every day. For Meta, China is now $18 billion of ad spending. Not China, the market. China advertises on Meta, $18 billion is more than doubled since 2022. You would think tariffs and de minimis shipping, right? That is the bigger promise, de minimis shipping coming to an end, is going to have some impact. We haven't seen it yet because people are afraid to pull back. You still have some time before it goes into effect. But we'd be naive to think that, a higher input cost and slowing consumer spend won't have an impact here. I've covered media for 20 years plus. There's going to be a problem. We haven't seen it yet. And our hope is, and you heard people say this, on your show for weeks, that the administration slows down and realizes the impacts of the economy from higher tariffs, right? It hasn't happened yet, but everyone we talk to they're incredibly nervous about the impact if this does continue.